I think that gold's going to go higher, but I do believe there's going to be some pullback here. There's going to be some profit taking. There's going to be some selling. But, remember, gold is also an inflation hedge or protection, which of course we still have monster inflation. So gold right now trading at 3403 or whatever it is in the August futures. I think they pull back and create a bigger buying opportunity. But like I said, I'm an investor in the physical metals that I own. I would never sell. I don't care where gold goes because I know 10 years from now, gold will be probably double what it is now, if not more. I own silver. I'm looking to buy more. I think it's going higher. Can it hit $50 this year? Yes.
The precious metals market has emerged as a standout performer in 2025, with gold and silver delivering exceptional returns amid mounting economic uncertainty and persistent inflationary pressures. Gold has surged 30% year-to-date, including a 13% gain over the past 3 months, while silver has similarly benefited from increased investor demand for safe haven assets. Veteran commodities trader Todd "Bubba" Horwitz has positioned himself as one of the most bullish voices in the precious metals space, building on his successful prediction that gold would reach $3,500, a target that has now been achieved. Despite recent consolidation that has seen gold pull back to trade just below $3,350 during European trading sessions, Horwitz maintains that the metal's upward trajectory is far from complete. Horwitz's investment philosophy centers on precious metals as permanent portfolio holdings rather than trading vehicles. He views physical gold as an asset he would never sell, regardless of short-term market fluctuations, and expects its value to double over the next decade. This long-term perspective is grounded in his belief that gold remains the most reliable hedge against inflation, which continues to persist at elevated levels despite central bank efforts to contain it. The trader's bullish outlook extends beyond gold to include silver, where he sees even greater potential for explosive gains. Horwitz believes silver has a strong probability of reaching the $40 this year, with $50 per ounce becoming achievable if market conditions trigger a major short squeeze. While stopping short of a firm $50 prediction, he considers the mid-$40 range highly likely and continues to actively accumulate silver positions. Market analysts have largely endorsed these optimistic projections, with many revising their precious metals forecasts higher in response to deteriorating economic conditions and intensifying trade disputes. Current analytical consensus suggests silver could reach $40 to $50 per ounce by year-end if demand trends persist, with some bullish scenarios envisioning prices above $50 if inflation accelerates and gold continues setting new records. Before we dive in, make sure to subscribe, hit the bell icon, and share this video. Your support helps us keep delivering sharp insights on gold, silver, and the financial markets.
And you're going to buy it, and you're going to buy it with money that you can afford to have some variation, because I would suspect, and I know Citibank came out this morning and said they think that the top of gold is in for a while. They're expecting a 25% haircut. Now, we all know that when some big bank makes a big announcement like that, usually that means they're trying to get to the other side. They want to be a buyer, so they're trying to bring the price down. Okay. But we are pretty much overbought in here. And again, listen, I'm a big fan of gold. You know that. And I've talked to you. When last time we talked, I think I said we're going to hit 3,500, which we have. I think that gold's going to go higher, but I do believe there's going to be some pullback here. There's going to be some profit taking. There's going to be some selling. But, remember, gold is also an inflation hedge or protection, which of course we still have monster inflation. So gold right now trading at 3403 or whatever it is in the August futures. I think they pull back and create a bigger buying opportunity. But like I said, I'm an investor in the physical metals that I own. I would never sell. I don't care where gold goes because I know 10 years from now, gold will be probably double what it is now, if not more. Okay. But between now and then, you cannot put money in to a market that you are borrowing or taking away from your house or car payment to use as an investment. You have to continue to invest knowing where we can be. So I think silver is getting ready to make a huge explosion. For the last couple of weeks, we were out 105 to 1 in the ratio, and all of a sudden now we're coming back in. So I think that silver is getting ready to make a much bigger move than gold. I think it's getting ready to cut into the ratio. But I do think either one or both, and platinum. I think platinum is still a great buy down here as well, because if you remember, at one time platinum was twice gold. Now it's a third of. I think there's a real legitimate chance that in the 40s for sure. 50 would take a pretty solid short squeeze to get it up there, but I think it can happen. Again, I'm long silver. I own silver. I'm looking to buy more. I think it's going higher. Can it hit $50 this year? Yes. Would I outright predict it and say everybody buy it right now? Well, I'd have them buy it right now, but I wouldn't buy it just because it's based on 50. I think it sees the 40s, if not the mid 40s. And again, there's an outside shot that 50 plays because certainly, again, as I've talked about that gold silver ratio, we've got to see some of that come in as well. So I do think that there's a chance for 50, but I would certainly say right now it's trading at what, 36? Actually, it's trading at, in the futures market, 37, 31. 42, 43 would be no shock. 50 would be a stretch, but I think, yes, it can I'll put my neck on the line. Yeah, I think you can see 50 before the year's over. Oh, that wouldn't shock me. I mean, it's a pretty big market, and you are fighting against a lot of the banks that continue to try to keep pressure on it. But at the end of the day, could it happen? Yeah. Listen, we've watched it happen before. You watched it happen in '08, okay, when silver went ballistic. And certainly, listen, it's a cheaper asset. It's another form. And if we realize what the true ratio was supposed to be when it was designed, the dollar system, the ratio was supposed to be 15 to 1. Well, right now we're at 90 something to 1. So certainly I could see that. I mean, right now silver is up almost $1 today, and gold at one time this morning was down almost $35. So again, listen, I could see it. I don't like to make those type of predictions, but it would not shock me at all if you saw a rip your face off rally, which is what happens when you get people on the short side and you get buyers coming in chasing it up because they'll pay any price to get it. And I would not be shocked. Again, the stretch I made was 50. Could it get to triple digits? It will be triple digits at some point. Remember, at one time, a quarter of an ounce silver was worth 25 cents, 1964. The silver quarter is worth a quarter. Okay. And look at what it is now. I mean, again, you're 100% right. There's a hell of a chance for a pretty big move in silver.
Veteran commodities trader Todd Bubba Horwitz has expressed qualified support for President Donald Trump, praising his business-oriented approach to governing while voicing sharp concerns about fiscal and monetary policy. Horwitz appreciates Trump's corporate mindset in federal decision-making, but remains critical of the growing national deficit and Federal Reserve interventions. Recent Treasury data validates Horwitz's fiscal concerns, showing the U.S. national deficit has increased by $162 billion compared to the same period last year. The fiscal year-to-date deficit has climbed from $1.20 trillion in October 2023 to May 2024 to $1.36 trillion for the current period, according to the latest monthly Treasury statement. Horwitz reserves his harshest criticism for the Federal Reserve, accusing the central bank of excessive money printing and market interference that distorts interest rates and fuels inflation. The Fed influences monetary conditions by adjusting the federal funds target rate and purchasing Treasury securities in open market operations, which injects funds into bank reserves and effectively expands the money supply. The scale of Fed intervention has grown dramatically, particularly during quantitative easing periods that significantly expanded the central bank's balance sheet. Most notably, the Fed created approximately $3.3 trillion in new money during 2020 to support the economy through the pandemic crisis. The type of massive monetary expansion that Horwitz argues contributes to persistent inflationary pressures. Let's get back to the video.
Well, I love Donald Trump. I've been a fan of Donald Trump the entire time because I think that he's trying to run the states like a business, which I believe is what we should do. Now, again, the deficits, not a big fan of building on deficits, but there's been so much debt created. And the problem is when you have a central banking system, or in our case, a Federal Reserve, or worldwide, a central banking system, they have the ability to print money at will. And of course, that's why inflation is so high. And those are why we have the problems we have, because what happens here is the central banking system or the Federal Reserve System did not allow the free markets to trade and establish what true interest rate should be. They start goofing around them and try to time the market. Now, you and I both know as traders, you cannot time any market. So they don't let the free markets trade them, and they just continue to create more money. I mean, if you and I lived like the United States government, we'd be in bankruptcy court or jail for the amount of debt that they created. So I don't like it. I think that we have to do something about Congress and the entire government structure and get back onto a balanced budget and reduce this deficit. But nobody seems to care. They continue to kick the can down the road. I mean, there's so many issues that you could easily cut. Even Doge showed you that there was a lot of areas where money could be saved and we could actually work on this. But again, you continue to kick the can down the road, and with the retirement age at 65 still, that's kind of ridiculous when you think about it. Well, I don't think that that's going to be so fast. I think the U.S. dollar still will be the safe haven. I think that Trump is trying to ensure that. But excuse me. But at the end of the day, they got to stop spending. They've got to stop the whole political gamut in the states. You know, there's too many criminals in our government, whether they be a Democrat or a Republican. It doesn't matter. They're both equally at fault and equally guilty of making too many bad deals in this country and spending too much money in other places other than here. We still give away too much money. I mean, the illegal immigration problem in this country is billions and billions of dollars that has to be cut. I mean, they have to be deported. They have to be taken out because they take advantage of the system, and there's too much money being taken out. The Social Security system, when it was put in play by Roosevelt, it was the average living age was 62, retirement age was 65. So the Ponzi scheme that they ran on Social Security was based on that most people would be dead. They'd never collect that money. Well, now the average living age is 78, and we're still paying off at 65. There's not enough employees. There's not enough people in the workforce to satisfy that. So the true retirement age now should be 80 if you want to stay on the formula, because now you're paying out money that you don't have. And of course, the government misspends the Social Security money that I pay. I mean, I paid the maximum every year that I've been employed. Okay. And I'm never going to get that money back. And of course, Trump came up with a great idea a couple of weeks ago. And he said, well, we're going to put $1,000 in a series of people's accounts, but it's untouchable until you can retire. And it's going to be managed by a firm where the government can't touch it either. Now, that would be a great plan. Okay. But again, you've got too many ways and too many places that we're giving money to. Look at all the money we've given to Ukraine. Okay, look at all the money we've given and blown through China and through other areas. That's the bigger issue. But again, these politicians are all on graft and are all getting something out of these ridiculously bad deals that they make. And again, it doesn't matter. This is a nonpartisan issue or a bipartisan issue. They don't care. They want the money, because why else would any politician spend $4 million of his own money to get elected to a $200,000 to $100,000 a year job? The worst job situations since 2021. And I think it's going to get a lot worse before it gets a lot better. But this goes back to my whole theory that you have to let the free markets trade and allow competition and allow people to come in versus trying to shut it down. And in 2008, they should have let the banks that were weak go out of business and let new banks come in, not support the banks. That was ridiculous that me, the taxpayer, get to help support a bank because they're supposedly too big to fail. Let them go out of business. There'll be other banks. What you should be guaranteeing is not the banks, but you should be guaranteeing the depositors so they get their money back and then they can take it to a different bank.
Gold and silver continue to reflect deeper issues within the financial system, from unchecked debt growth to central bank interventions. As inflation persists and fiscal discipline remains elusive, gold stands firm as a store of value, while silver shows potential for sharper upside amid tightening ratios and rising demand. Do you think silver will outperform gold in the months ahead? Let us know in the comments below. If you found this insight on gold and silver helpful, give it a thumbs up, share it with others who follow the markets, and thanks for watching.